Hi, this is Kevin Ross, CEO and founder here at Parcel Revenue Corporation. I'm also the inventor of the virtual land bank platform. And so today we just want to take a quick look at two things. One, we want to show you our revenue point platform, which we've nicknamed Grow because it's designed to grow tax revenues in rural and urban communities. And the purpose of the system in totality is to link real estate vacancies to income sales and property tax revenues, and to create automated workflows and procedures that will allow us to cure real estate vacancies to improve the tax revenue outlook for communities. And so the Grow platform itself this is an MVP product. So we actually built this on top of a white labeled version of FreedCamp, which allowed us to have all the features of a fully managed, fully developed project management system without having to go through the time and expense to code it ourselves. At a later point, we'll do that, but as an MVP, this works great. And then because FreedCamp hooks to Zapier, we're able to do so many different things with the data. Our um, imagination is the only limitation with Zapier. So we log in to Grow, and what we're going to realize when we log in is that in this particular case, the data has already been interpreted, and the platform is going to guide both local government and our internal staff that work as an extension to local governments through outsourcing. They're going to guide us on what needs to be done in order to cure a real estate vacancy. And so all of the tasks that are needed to cure the vacancy are going to be sent through Zapier and APIs into the platform where we can work with it and also where we can collaborate with local government. And the key here is that these tasks and workflows are built on 20 plus years of experience dealing with distressed real estate, the exact type of distressed real estate that causes declines in income sales and property tax revenues, hurts local governments, increases crime, increases blight, the whole 9 yards. And so, what we'll see here within the platform is that we're able to step by step identify everything that needs to be done from the point where the code enforcement officer who works for the local government identifies the property, or our canvassers who are given technology in the field that allows them to automate the workflow of identifying which properties are causing the blight, tax revenue losses, and also potential blight and tax revenue losses. Identify those properties, bring that information into the workflow in an automated fashion through Zapier. And from there, we have very, very detailed case management plan that allows caseworkers that work for us, attorneys that work for us and review everything and manage everything, and local building and housing officials and economic and community development officials to collaborate with us and give them an understanding of what's going on with a particular property and streamline the steps that need to be taken in order to cure those vacancies and return that real estate to a productive use. And for the purpose of this video, or all of our videos for that matter, productive use means that a piece of real estate is being used for its intended zone purpose, and it's an asset to the community, and it's generating income sales and property tax revenues from its use. And so here, very simple. Here's our initial code enforcement action, why the property is being cited. So this brings it into the workflow. From there, an attorney is going to check the case management plan, which is created from CRM data, and the title examination, which is done by whichever title or escrow company we're working with in that particular geographic area, or by our own in-house examiners, so that we can understand what the legal issues are that are going on with the property. And so these first two tasks tell us the two most important things: what's going on with the property physically and what's going on with the property legally. And once we know those things, then we can develop a case management plan, which is essentially the result of a mini feasibility study that's being done on a property by property basis and guiding everyone and all the stakeholders involved in the deal with the best practices to move forward and cure the vacancy in a timely manner. This particular workflow is a workflow that happens often. You have a property that's empty, the owner's moved out, it's been left vacant. and there's a lien on it to a mortgage lender that's most likely more than the property's worth. And so we have to execute what's called a short sale in order to get the lender to agree for the property to be sold for less than the full balance owed on the mortgage or lien. And so these properties become what are called zombie properties and sit empty for years and years and years and years and years. But within the platform, we're able to reduce those years down to 30, 45, 60 days, assuming that we can find a suitable buyer for the property at the end of that process. And so we're going to trigger code enforcement. We're going to have the attorney on file. The attorney works for us, review everything to make sure that what we're doing is going to result in a clear insurable title being passed to a new owner who can bring that property back to a productive state. And then here in parentheses, you'll see our Zapier automations that are designed to automate mundane and time-consuming processes so that we can move through the workflow a little faster. And ultimately, the cases are sent to caseworkers. The caseworkers work for us, and they're trained to deal with distressed properties and certain situations within the distressed property realm that are unique to distressed properties within the real estate industry. And so as caseworkers work through the case, and the automations are constantly updating us and moving the workflows, what we get is eventually we get down to this point where we have an offer on the property. A real estate agent has been hired. They've listed the property. Prior to that, a property preservation company has been hired in order to secure the property, to make it safe for realtors and potential buyers to visit, perhaps cut the grass, cleaned out trash, did whatever needed to be done in our direction in order to get that property in a marketable state. And so now we're to the point where we have an offer on the property, and the offer is going to be accepted and go through escrow and be presented to the lender for approval. And once that happens, we are going to close escrow and have our attorney on file go back over everything to make sure that there are no legal issues or complications that might pop up later that might cause a title insurance claim to be filed at some point. And then we're going to trigger an automation which now begins to watch the buyer, and this is the person who just purchased that property. We're going to begin watching them immediately to make sure that they're doing what they're supposed to do to make sure the property remains in a productive state even after that transaction is over. So we're not going to rest on our laurels because we were able to move a vacant property to a new buyer and go from unproductive to productive. We're going to continue to use the system and our resources to monitor that buyer so that if he, she, or they get into a situation down the road where that property is threatening to slip back into a state of unproductivity, then we can do something about it proactively versus waiting for the property to become unproductive and letting it sit there for 4, 5, 6, 7 years and ruin the community and cause extremely valuable tax revenues to be lost, which are the current methods that governments use. And so all of the data in the platform is being interpreted and understood and captured within Microsoft Power BI. And within Power BI, we have certain metrics that we're looking at that really guide us and help us understand how distressed real estate within a community is performing. So you just kind of imagine that we're a property manager and all of the distressed real estate within a community is our portfolio of properties. And so we want to have key metrics that can guide us insofar as productivity is concerned, and key metrics that can tell us when an unproductive state might be coming in the future so that we can launch the proper countermeasures and counteractions to make sure that we don't go from productive to unproductive. And so as the data loads, very shortly we'll be able to see on the screen that the system is watching metrics that are built on proprietary algorithms. And those methods, the most important method, which we'll see in a moment, is what we call the partial revenue at risk. And so partial revenue is a proprietary algorithm that we created, which takes the income, sales, and property tax revenues generated by a particular parcel of land within a community. And it helps us understand when that revenue is at risk. And by at risk, most likely we mean that the property is going to be left vacant, which makes it difficult to collect property taxes, not just from that property, but from neighboring properties that are adversely impacted by vacant properties, makes it impossible to collect income taxes because there's no one living there. And also that hurts us in the sales tax category because you need residents living in your community and spending money and buying things in order to generate income taxes. So right here, right in the middle, partial revenue at risk, is the main metric that we're looking at, the key metric that we're looking at, the key performance indicator that we are looking at when we look at our data set. And so in this particular instance of the virtual land bank platform, which is being run by the Abandoned Homes Project in Cleveland, Ohio, which is our real world test, beta test site where the Abandoned Homes Project is actually functioning as if it is a government entity, and it's operating with the necessary functions to turn unproductive real estate into productive real estate, recover delinquent tax revenues, and keep the property on the road to future productivity by enforcing subsequent conditions, which is just a very simple way to say that when we sell the property to someone, we're going to contractually engraft conditions into that sales contract that allows us to have future input as to how that property owner maintains that property. And if they fail to maintain it at a certain standard, then without the government getting involved, we can use civil contract law to initiate legal action that will allow us to make sure the property is maintained, make sure the property taxes are being paid, and then be reimbursed through court action. And so the metrics we're looking at, that's the main metric. Key metric, zombie title influence score. And I'll just run through these really quickly. A zombie property is a property that is sitting empty for an extended period of time. And there are certain legal and physical factors that contribute towards the zombie situation. And so we call it a zombie because it's essentially a property that's, it's there, but no one can really do anything with it because there are legal and title issues that are impeding a sale to a buyer, a sale where there can be clear insurable title. And so the system looks at certain factors within the data, lets us know what percentage of the properties we're looking at are meeting that zombie title influence score. And the goal is to get that down to zero or as close to zero as possible. At-risk parcels, simply the number of parcels that we're looking at in a particular community. Location of at-risk parcels is just a simple map that shows us where those parcels are located. The revenue point score. So this score basically tells us the strength of the transactions, the real estate transactions that are happening within a community. And so in communities where you have very, very strong real estate values, you see mostly owner occupants transferring properties to owner occupants. And as the market in that particular community gets weaker, you start to see transfers to house flippers, transfers to landlords. So this metric is telling us that 57% of the transfers that we've seen happen in this particular subset of properties are transfers that are going to be non-owner occupant buyers. And so that's a concern because the neighborhood has been turned into basically a casino where ROI is the driving factor, the driving force behind the decisions versus homeowners that make decisions or even not just homes, but even in commercial real estate, owner occupied real estate, where people not only make decisions based on ROI, but make decisions based on beautifying the community and becoming a part of the community. So progress of social service campaigns, that tells us the progress of the campaigns that we're putting owners in to avoid properties from becoming unproductive or remaining unproductive. Partial revenue generated. So when we transfer real estate within the system, we're generating revenue for the community. And so we track that metric. Vacancy rate tells us of all the parcels we're watching in the particular community, what percentage of them are vacant. Government controlled factors limiting tax revenues. This tells us things that the government is doing right or doing wrong that are contributing to the issues that are limiting tax revenues from coming into that local government entity. At-risk factors, burdening ownership. This tells us exactly what's going on legally down to the granular detail. So let's say someone has a mortgage with a particular bank. We've got mortgage lien holder history built into our system from 20 years of doing distressed real estate deals. We know the likelihood that some lenders are going to be more cooperative than others. So at the granular level, we can understand what's burdening the people who own the distressed real estate And that helps us develop a case management plan to counter that burden with an activity that's going to move the needle forward on restoring properties to productivity or maintaining productivity. Um, re- Referrals to social service campaigns. This actually breaks down the actual programs that we are referring homeowners into so that they can get help. Here, loan modification is a very simple one, helping people get loan modifications if they're having trouble paying their mortgage, for example. Veterans assistance. There are programs out there to help veterans or to help older veterans who own homes that have equity to use the VA loan system to refinance and get money that they could use for repairs or to pay off high interest credit cards, taxes. Time to productivity is a metric that tells us when a property becomes empty, how long is it likely going to take to get that property back to productive use, assuming we have a willing property owner willing to sell or make improvements. And if they're selling, assuming that we have a buyer that can close and pay fair market value. And tucked in the corner here, which for some reason I'm having trouble seeing, but the impact of at-risk parcels on neighboring properties. And so what this metric over here tells us is what impact vacant and distressed properties are having on neighboring properties that are bringing down property values and bringing down the tax revenue rolls in general. And that is one of the main factors that cost communities a lot of money. When you have a lot of properties that are in distress and they begin to bring down the value of the surrounding properties, as a result, you're not going to get nearly as much tax revenues coming to the coffers as needed. So that's just a quick breakdown of the Revenue Point platform. This version that we've nicknamed Grow, that's a low-code minimum viable product that we've built on FreedCamp, connected that to Zapier so that we can automate our data collection, automate our workflows, automate sending key data to Power BI so that we can interpret it and have those key metrics at all times. And we've also gone over our virtual land bank dashboard, which is a Power BI analytics product that gives us those key metrics as soon as we can update the data set. Thanks.